BigSquareRoadRoo.com. The OCC, Office of Comptroller of Currency, has released the latest derivative report showing in blatant, in-your-face statistics from the government. That's a rigged game, it's a con game, it's a Ponzi scheme. It is out of control, as in uncontrollable. What's going on behind the scenes is the destruction of the derivative market. It's not about the repo. It's not about the $100 bills. It's not about rigging all the markets. It is the destruction of the largest market on planet Earth, which is the derivative market. Count them, 4 banks own about 90% of all derivatives in the United States. 4. Let me say it again. 4. So here's the report, quarterly report on bank trading and derivative activities. You guys can find this at occ.gov, right out of the Office of the Comptroller of Currency. So it's not coming from the COMEX or Jeffrey Christian or anything like that. This has all got to do with interest rate derivatives, gold derivatives, and silver derivatives. Here's one of the most startling charts you will ever see. And you might ask, why is this even allowed? Graph number 4 on page 22. 4 banks dominate derivatives for insured U.S. commercial banks. Insured as in we are guaranteeing them. We, the people, are the ones who have to print the money to bail them out when this thing goes sideways. The FDIC doesn't have any money. The U.S. government, we have to create new money to bail out these banks at the slightest hiccup, which is coming, obviously. That's what we're doing. What do you think the repo is? It's a slight hiccup. It's more than slight. So here, the orange is the top 4 banks. I'll get to that in a second. Futures and forwards, total swaps, total options, credit derivatives, which have shrunk. It's the only one who had shrunk. And then total notional, which is off the charts. Top 4 banks. Out of control. And then it goes into who these banks are. These banks are not individual units. They trade back and forth to each other to rig the prices. And I'll show you proof of that. Of course, JP Morgan Chase is number 1 by far. Bank of America, Citibank, and Goldman Sachs, which isn't even a bank. Well, they got banking status when they had to be bailed out in 2008. These are the criminals. These are the banks. The management of these banks are literally criminals. Insane. Now check out some other data. Netting gross credit exposure. The credit exposure is pretty much gone. That's the thing that killed us in 2008. It's not about that anymore. It was the credit default swaps created by Blythe Masters that really killed us in 2008, along with the mortgage-backed securities. Now it's not about that. It's much bigger. This is the precious metals contract, mainly silver. They removed gold from this. Actually, it was a good thing for silver investors, but they removed gold and put it with FX, so you can't tell what's going on with gold. And gold is money. This is what's going on in silver. As you can tell, precious metals, look at the dominance. Oh, this is 1 year out. 1 year contracts are to rig nearby prices. And they trade back and forth with each other to rig the price. But look at this. These are 4th quarters. Boom, boom. We are at the highest rigging moments ever in silver. This is mainly silver. Could be some platinum, palladium in there. $40 billion of silver derivatives as of the end of 3rd quarter. During the quarter, they traded much more than that. Insane amounts higher than that. But $40 billion at the end of the quarter. And I want to show you some. I'll show you who it is. This is the mainly silver, but other precious metals. It's called precious metals derivative position. Right here. JP Morgan has double the size of any other bank, and there's really only one other bank. They keep passing the silver hot potato off back and forth. Citibank and JP Morgan. Citibank, JP Morgan. Citibank, JP Morgan. JP Morgan, third quarter, increased their silver derivatives by, this is the prior quarter, from 17.93 to $21.23 billion increase in a quarter that they were accused of RICO charges. 8 of their traders have been accused of RICO charges. I think 6 have been accused. But 8 are under investigation or pending or have been already busted. How in the world can the CFTC, the SEC, the DOJ allow JP Morgan to be the largest derivative holder in silver by far, by unbelievable amounts? They own over half of all derivatives from every single corner of the earth as far as reporting for this report. The total is 40 billion of derivatives for silver. And why is that? Who knows? JP Morgan has $21.255 billion worth of silver derivatives. Why? Why are they even allowed to be in the silver market? Since they're up on RICO charges right now, where's the cease and desist order? It is a con. It is how they keep the system going. I'll show you another really good stat, if I can find it, that proves, literally proves, that they trade back and forth to each other. You take the hit this quarter, we'll take the hit next quarter. And you look at all these banks on, JP Morgan stands out in every category. It is amazing. All right, let's take a look here. Total JP Morgan derivatives, $45 trillion, or $55 trillion. Citibank, $49 trillion. Goldman Sachs, $49 trillion. Bank of America, $21 trillion. And then it dives down to Wells Fargo that has all the interest rate derivatives. They keep control of that. And then it's just off the board. HSBC obviously is going to be using derivatives, but nobody else uses derivatives except the top 4 or 5 banks. Why? Because it's a con, it's a scam. They pass the hot potato back and forth. All right, I'm going to show you, I'm going to find the chart. There's a lot of data in here. Basically, it's all in there to disguise what's really going on. A big, huge Ponzi scheme to set prices. It might be in the... I don't know where it is, but it shows a chart of who made money. And it was like the exact amount was made by JP Morgan, which was lost by Citibank. Meaning, okay, you take the, we're going to trade back and forth, have our computers trade back and forth to rig the price up, down, or sideways. You're going to take the loss this quarter, we'll take the loss next quarter. And it's a big loss. Now, Ted Butler says they're going to stop this. Yeah, I'm not so sure. Here we go. I'll find it, don't worry. Hang in there. It just jumped out because JP Morgan made like $1.2 trillion on trades on I forgot which category it was, and Citibank lost the exact same amount, or almost the exact same amount. I'll have to get it for another time, but listen to the executive summary of this report. Insured U.S. commercial banks and savings associations reported trading revenue of $7.2 billion in the third quarter. Remember, every trade there's a winner and there's a loser. And who has the massive amount of derivatives? 4 banks. 0.9 billion less than the previous quarter. Trading revenue. Insane. Credit exposure from derivatives increased in the third quarter 2009 compared with the second quarter. Increased $54 billion. That's a huge jump for the credit default swap type stuff. Why? Because it was going down for ever since 2008. Now it's started to go back up. Derivative notional amounts decreased in the third quarter to 3.7 trillion. Derivative contracts remained concentrated in interest rate products, which totaled $147 trillion in interest rate products. Insane. The entire thing is an insane Ponzi scheme waiting to blow. And at the head of this is JP Morgan Chase. And we all know what's going on with JP Morgan, especially in the gold and silver trades. Right? They're being brought up on RICO charges. Look at that. That's silver right there. The majority of that is silver. And look at all of them. Almost all the contracts expire this year. Or within 1 year. This is the 1 year is the orange. Nobody's out past 5 years in silver. What insane person would put a short on silver for 5 years out? That is just criminal and is off the charts. Hang on tight, my friends. JP Morgan's being taken down, and they will take down everybody with them. Everybody. FixWeir.com. If you're interested in more, go to Road to Ruta, Friday Road Trip. I have posted the latest Fed repos. Interesting. For December 24th, go check those out. Those are always fun to track. Also on Patreon, you can I post the repos on Patreon as well. Big Weir, I'll talk to you guys later.